Now, I know many of you are frustrated about this. We've gotten a lot of calls about it. I feel frustrated too because I've championed SoFi at many points. When Craig in Florida called about this one a couple of weeks ago, I told him I still believe in the enterprise and issued an open invitation to CEO Anthony Noto to come on, explain why the stock's still worth owning. Luckily, he accepted, so we can get right to the bottom of this. Mr. Noto, welcome back to Mad Money.
Thank you, Jim. Thanks for having me.
This was a pretty interesting week for SoFi. Their CEO, Anthony Noto, went on Mad Money to talk with Cramer on Wednesday and put the market's fears at ease with regards to the convertible note offering. And just earlier today, he also hinted at a brand new tax product that the company could be introducing shortly. And in this video, we're going to be talking about all of this along with all other SoFi news that we saw this week. As always, just before I get into the news, if you enjoy these videos and you want to follow along, feel free to subscribe to the channel for more. Let's start off with the stock price this week. Over the past 5 days, the performance has been somewhat mixed. SoFi did close up 3.5%. They opened the week at $7 and they broke below $7 on Tuesday. They went as low as the $6.80 range before rising on Wednesday on Powell's remarks. As we know, the FOMC meeting was this week and the entire market seemed to rise on Powell's remarks, and it closed off the week at $7.30. The biggest pieces of news this week, I would say, hover around Anthony Noto being on Mad Money on Wednesday, but if we go chronologically, on Tuesday, Galileo released news that they expanded their Buy Now Pay Later product for post-purchase. Now, what this does is it basically is an API-enabled service, and it allows banks and fintechs to provide post-purchase installment payment options to their customers. This enhances flexibility, this enhances financial access, and it aims to capture a growing buy now, pay later market, which is projected to reach 900 million users globally by 2027. In their press release, Galileo highlighted some benefits, including market differentiation, entry into lending for fintechs, revenue growth, and transpayment payment terms. David Foyer, Galileo's chief product officer, emphasized the importance of financial inclusion, highlighting the accessibility of buy now, pay later across all merchants accepting credit and debit cards. As we've mentioned before, around Galileo's product improvements, they're frequent, they contribute to an expanding moat that's ever widening on Galileo's product offering stack, and what that does is it makes it more relevant for a larger number of customers, as well as making the aggregate total offering stickier because the moat is just deeper, right? And just moving away from Galileo for a moment and back to SoFi's core product, on Tuesday I saw this post from Reddit, which had found that the FFIEC updated their top 100 US banks by updated holdings as of December 31st, 2023, whereby SoFi jumped from number 78 largest commercial bank in the US all the way to number 71, which was a slot previously held by Credit Suisse. So they kicked Credit Suisse out of that slot. One thing to keep in mind is that this jump is as of December 31st, 2023. It doesn't account for any of the news that we've seen in 2024, for any of the progress that the company has made in Q1. And we know that the NBA deal, which was announced over the past couple of months, we're expecting a huge influx of new members as a result of that deal. We expect this number to keep accelerating. It's absolutely terrific that they're jumping slots even without considering these pieces of news. And the second thing to note is when I went to cross-check this with the Federal Reserve site, which is what I usually check, still has them as number 75. So it might not be updated yet across the board, but I just wanted to make sure that I report on that discrepancy there. And just to wrap up the news, on Tuesday, we saw Jeremy Rischel selling stock. And what happened here was last week, we saw a series of Form 144s, which is the intent to sell. This was released on March 15th, whereby a number of executives, including Noto, Chad Borton, Jeremy Rischel, and others were all selling due to tax reasons. As their stocks vest, they need to sell a portion to automatically cover the taxes. However, for Jeremy Rischel, we saw a second Form 144 released just 4 days later on March 19th, which highlighted further sales. And this was later also confirmed on Thursday night with a Form 4, which outlined a sale of over 56,000 shares of SoFi for a $6.93 price target. Keep in mind that Jeremy Rischel, the chief technology officer, still owns over 390,000 shares of SoFi. A couple of thoughts on this. Firstly, the CTO has been consistently selling stock. He sold 3 months ago. He's been selling all throughout 2023. And if I'm not mistaken, he's actually the executive that has the most frequent amount of sells across all of the executive class at SoFi. We also don't know the reasons why he's selling. There could be a ton of personal reasons. Keep in mind that this is also a form of compensation for the executives' time and effort that they put into growing this company. And so they're well within their bounds to sell their stock. Now, the other side of that argument is that whenever an executive does sell stock, it could be seen by retail, by institutions, by the wider market as a lack of trust in that business and a lack of confidence in that business's ability to execute and innovate in the future. Because why would they be selling today when they can sell much higher in the future after they've successfully executed? So it's an overall lack of confidence in that business. And that initial question of why did this person sell leads into a conversation around the effectiveness and the impact that that person's making. And I even found myself, despite actively trying to remain objective around this news, I mean, it's not a big deal at the end of the day, but I even found myself comparing the sheer output of features that we're seeing on Galileo's side, where it seems like every week or every 2 weeks they're coming out with a new product offering of that product led by David Foyer, the chief product officer, versus what we're seeing from a technology release aspect on SoFi's side. A lot of people are still waiting for the Zelle integration. A lot of people are still waiting for level 1 options. A lot of people are still waiting for, basic functionality that when comparing SoFi to Robinhood, SoFi just seems completely subpar. Well, all of this stuff is on Jeremy Rischel. And so people are putting two and two together and they're saying, wait a minute, we've been waiting on this stuff for quite a while and this person has been selling. Something must be wrong here. But the thing that I do want to know is that there are personal reasons why somebody might be selling. And while those two things, might happen at the same time, they're not necessarily because of one another. So I just wanted to put that out there. The other piece of interesting news came on Wednesday when SoFi's CEO Anthony Noto went on Mad Money with Jim Cramer and immediately was asked about the convertible note offering that they provided over the past couple of weeks, which sent their stock tumbling from the $9 range down to the $7 range. Now, this entire interview with Jim Cramer lasted about 6 minutes, and Tanner and I covered this live on our channels, and I posted the full interview on X shortly afterwards. And I won't dwell too much on this one because I've already shared my thoughts, but I thought Noto clearly articulated that this deal that they did with regards to the convertible note offering was done from a position of strength and added about $40 million to $60 million in interest savings, which will reflect on SoFi's bottom line immediately. And one of the more interesting highlights of this segment was that the 12.5% preferred shares are not the only savings, and that this $60 million could contribute to significantly ensuring that SoFi beats all of Wall Street's estimates from a bottom line perspective by a huge amount, because Wall Street is expecting them to come in very low. I think 6 cents EPS was the range, even though SoFi themselves expect 7 to 8 cents from their own guidance that they issued. And I personally think that they're going to come in above 10 cents EPS. It's going to be like 12 to 14, if not even more, because they're saving 60 million just on this deal alone. And I think that's really, really significant and should not be underestimated. And personally, I think that message should be communicated to a wider audience, and it should be consistently reiterated by Noto, because that's what the wider market needs to hear to get it through their head that, oh, wait a minute, this business is set up to succeed. If we read between the lines, we can be highly confident that they're actually going to come way above their estimates, and their estimates are just very, very conservative.
But the reason why we did it is really important, because I think this is what will put some momentum back into the stock. First is we had this 12.5% debt. We also had another piece of debt that's about $500 million that we pay 7% on. So we're going to save between $40 and $60 million of interest expense a year by refinancing from 12.5% down to 1.25%, where the convert is, and from 7% down to 1.25%.
So in other words, you didn't need to raise money because you have a lot of bad loans.
No, we did this to lower our cost of debt because we have done so well as a company. We can now issue debt at 1.25%, retire the 12.5% debt and the 7% debt.
Also on Wednesday, I saw a post about the short interest that, as per Ortex, it looks as though there's about 173 million-ish shares sold short. We don't know the actual NASDAQ numbers since the filings are 2 weeks delayed, but tools like Ortex give us an indication of more recent metrics with regards to short interest. And per these numbers, if they are accurate, it could mean that SoFi's short interest would not only break a new record, the previous record was 158 million shares sold short, but also that short interest would come in around 20% of the float, which is absolutely insane if you ask me. The fact that short interest is increasing as this business is consistently executing, but I wouldn't be surprised, right? And you shouldn't be surprised either if you've been following the channel for a while, if you've been following SoFi for a while. I mean, it's not really that all surprising, considering that Later that night, as Noto cleared up the FUD around the convertible notes, you had people like Compass Point coming out and reiterating their $4 price target on SoFi. The chain of events with regards to analysts is absolutely hilarious at some point because you just expect stuff like this. And so knowing that, I mean, are you really surprised that you see 20% short interest, that it's growing every single month? Finally, earlier today, Chris made a post on X saying that he would much rather pay money to SoFi to help him do his taxes rather than TurboTax. In his post, Chris, Data Driven Investing, said, SoFi already has the bulk of my financial information at their fingertips. I know you've talked about this in the past, Anthony Noto, but it would really help make things easier. And Anthony Noto replied to this. He actually retweeted it saying, we hear you. And I posted this as a hint that SoFi would launch a tax product very shortly. This is really interesting because this is actually one of my predictions for 2024 for SoFi, was that they would launch a tax product. And I think it could be very synergistic with the entire ecosystem, especially considering the information that they already collect on their users through Relay. They already know the financial health of all their users. They already know, let's say, the checking and savings side of the banking aspect of all their users. And they could very easily aggregate a lot of these findings and have a tax product be completely synergistic with that value proposition. But of course, this is just me speculating with no clear timeline, which has been defined by the company as of yet. And even further to that, there's not even been a clear direction that this is in fact what they're working on. It's just a hint from the CEO, but we know this company and they make hints from time to time, and so we should trust those hints. I think if SoFi can manage to deliver a tax product in 2024, it would unlock a ton of benefits and further the company's ecosystem in general with regards to their user experience, that moat around their users, right? They would move towards owning the full financial relationship with their users on an end-to-end basis, from lending and mortgages all the way to investing, to having that relationship from a credit card, savings account, checking account perspective, to measuring credit score, all the way to completing taxes and insurance products later to come as well. And I think all of that in one ecosystem is really the long-term vision that SoFi is driving towards. And right now I'm really interested to see how much of that they actually deliver on in 2024, what the next big thing will be in 2024 from a product perspective. Because if there's one thing that we're absolutely sure of this company, is that they keep executing with regards to their growth, their compounding, their underlying business. And that's really something that gets me excited about the business. So for right now, this is the Fundamentals Investing podcast. Let me know what you think of the tax product, and make sure to tune in later tonight on this channel at 10 o'clock Eastern time for the SoFi Weekly podcast, where we're going to be discussing these and more topics in more depth. Thank you so much for listening.